I saw a mouse where there on the stair. Where on the stair? Right there. Little mouse with coffee coming. Hello, my little mouse.
I'm not your mouse.
Yes, you are.
No, not.
Well, you go squeak a lot, so that makes you a mouse. Sit down, shut up.
You know.
Right. Camera's over there.
I know, I can see.
Hello, boys and girls. We're going to do coffee with Scruff. I've got me coffee. I'm the Scruff. And that's Wonder Wink. Let's crack on. And a warm welcome to one and all. For those of you not been here before, my name is Langers and I am the Scruffy Trader. And sitting next to me is my partner in crime, Wonder Wink, Winky. And today we're both doing coffee with Scruff. And it's driven by a simple word: focus. And why? Because one of us two isn't focused, and I'll show you why. We're meant to be working my screens, getting ready for next week and setting something up. Winky's screen, don't know if you can see that. What is on there? Oh, what do you know? It's a shopping channel. There's a shocker. Winky skiving again.
It's Saturday.
We work for ourselves 24/7.
Who'd be stupid enough to do that?
Justify, stupid.
Now, I know this might seem odd and you sort of come to this thinking, hold on a second here. I thought this was a trading channel. What are these two idiots up to? Well, you got the two part right, and you got almost half the idiot right. That'll be me. Because I like to clown about and enjoy my day. But it doesn't mean to say I'm not focused. That's the difference. So what I'm going to do is with this video, we're going to discuss about how to frame into a focus using a tool. I'll drop it on the whiteboard, or I'll probably be on the whiteboard first. Then I'm going to show you how focus got me out of trouble this week. And then at the end of the video, I'm going to do something for Morningstar as requested. So if that sounds good, please stay tuned. Smash that little subscribe button. And as always, drop your comments because I answer every single one of them. So let's discuss this focus.
Yeah.
Right? Now, for most people, that's a broad subject. They go, focus, we're talking about. How on earth is that going to make me money? It's the first thing that'll make you money. Because if you haven't got your eye on the ball, you're finished before you start. If you're just coming to the market, flippant, and going, just want to be rich, just want to make some money, are you focused or are you dreaming? And I'll lean to the side you're dreaming.
You know what I am? I'm a dog chasing cars. I wouldn't know what to do with one if I caught it.
Does that sound familiar?
So how do you stay focused?
I plan it. I plan everything. See,
Everything.
well, let's be honest, you live with me a long time, right?
Yeah, but things happen. You can't plan every single.
No, you can't. But what you can have is a contingency plan. And your contingency plan is knowing when to trade, but knowing when not to trade. Take this week. What has happened on the news? Ukraine. Massive news event this week. How do you plan for something like that? You can't. But you can have a set of rules around yourself that can stop you trading at a certain limit. Now what I'm going to do is I'm going to kind of explain it slightly on the whiteboard and then show you the tool and carry on. And I'll drop a statement into this because I got caught this week royally on that news event. You know, because one of the dangerous things is you can have swing trades which are running for a few days to a few weeks. You don't know what's happening in a few weeks. To predict what's going on in the next couple of hours isn't that difficult if you've got a solid plan, and that's what I do. I predominantly stick with day trading because I know I can go from this level to that level, and ultimately I've just got to get direction right on the point of entry. You know, it's not that hard, not particularly. But swing trading is a different kettle of fish because you are looking too far into the future. Now, if you've got a position trade on that was for a few months, would you know they'd have kicked off this week?
No.
No, you wouldn't, right? That's where your stops come into place, because your stop has one job: protect the account. That's all it does. Protects the account in case something goes wrong. The next part of protection the account is something I'm about to show you. So let me jump on the whiteboard and we'll see what we can find.
I don't know where you get your delusions, laser brain.
Okay guys, so just to kind of pull this into focus, if you like, I'm going to put some jog points on here and give you a rough idea of what I'm driving at about planning for things. Now, most of the time it's just show me a strategy, that's your plan. No, it's not. Your strategy is just a little bit of what you're after, because we all trade individual. You know, there's no magic pill out there, there's no super system. It's just common sense a lot of the time. All right, choose a dominant direction, look for some reason why you want to get in, and then target accordingly based on an ATR. That's as simple as it gets. Myself, I prefer momentum ignition from a level. And if you're not sure what that is, just means you can see the volume building up in and around a level and you're wanting that quick spike to get 10-20 pips done. And the 10-20 pips is a minimum rather than a maximum. So if I haven't got enough room to get those 10-20 pips, I just don't take the trade. So that's kind of your first rule, you know, knowing how to filter. So you need to be able to filter your trades to start with. And that's one way to do it. If there's not enough pocket of air, don't enter the market. But you've got to go beyond that and look at the main objective, what you're after. And I did that because it could be anything. It could be money, it could be car, you could just call it a goal. But for the purpose of this, that's exactly what I'm going to call it. Because the main thing you need to be focusing on is a goal. Now that goal is what pulls in focus. And that's exactly what we're trying to do. It's how to stay on point. Now, if you just go into the markets thinking, give me some money, what you're trying to achieve, you don't know. So you don't know what your boundaries are. And if you don't know what your boundaries are, you can't plan it. This is simple stuff. Now, an easy way to do it is break it down into daily allowances, little pocket money. Now, I'll jump on the screens in a minute and I'll show you a tool that'll work it out for you quite easily. But basically what you're trying to do is take a big chunk into something that's manageable, and then you can work within it. I'll give you an example. If you look at your trading year first, so you're looking at your year, or month, week, day, whatever, right? But let's just say you want, I don't know, 10 grand. You want 10k in a year. If you looked at that straight away, it'll scare you. You go, how do I get that? So you'll go hell for leather at the markets, trying to get there as quick as possible. But what is 10 grand if you broke it down? You know, what about breaking it into such a point that it makes life easier? Well, you've got 12 months in a year. Common sense, all right? But let's just say you aim down at 1k per month. So what's that got to do with a slice of bread? Well, you've already pulled the focus in. You're not looking at the 10k. you're looking at what's in front of you, which is 1k. And I know you're going to turn around and say, oh, hold on a second, your maths is wrong there, big lad. Because I want 10 grand and you're saying 1,000 a month. Well, there's 12 months, that's 12 grand. Yes, there is. But I'm also assuming you're going to screw this up. And you need a buffer zone. And that extra 2 months is your buffer zone. So if you can average your 1,000, you'll be fine. You know, just allows a little bit of losses. I know that's a bit wishy-washy, but it's the rough idea. What I'm driving at is then breaking it down. And then you can take that down into a week, down into a day, and then from your day, you break it down into a trade. And it's that simple. What you've now done is you've framed everything down to the trade itself, based on a massive goal. Because if you go to the markets looking for 10 grand, you're going to swing for the fences, you're going to overtrade. Not only are you going to overtrade, you're going to overstretch your account. And then you're going to fail. And then when you fail, you fall into what's called revenge trading, where the markets hurt you, so you'll dive back at the market to see if you can hurt the market. But the market's bigger than you, it's stronger than you. And on a day like what's been this week, it's not only bigger and stronger, it is faster and unpredictable. So it is going to hurt you even more because you're already battered from the loss you've just taken. And why? Because you weren't focused in the first place. You weren't looking at the end goal. You were just looking at the here and now and what's happening. So what you do is you start at the top, break it down, but then you give yourself pocket money. And once that pocket money's gone, you don't trade anymore that day, regardless. And that stops you over trading. Let me jump on the screen and I'll show you a tool. And I'll kind of explain it a little bit better. But what I'm driving at with this is really just to break everything down to a small chunk. And if you've got a small chunk, it becomes manageable. And then rinse and repeat and do it every single day. And you'll find this process is a lot simpler. So let me jump onto the screen. I'll show you a screenshot first. Well, in fact, no, I'll log in and I'll show you a live statement first because I got clobbered this week. And then when I go onto the tool, it'll help you understand why that clobbering wasn't as bad as what it could have been.
Well, we're waiting.
Okay, boys and girls, we back. Got my coffee because Wonder Wink went downstairs to have a little laugh because one of us did something stupid. I'll not tell you which one it was.
It was you. You popped the light bulb and then went to touch the light while it was on and wondered why your finger got burnt.
You ding dong!
So what part of I wasn't going to tell you which one of us it was.
You
That's a typical woman, that is. You know, doesn't know when to keep its gob shut. She doesn't actually. If you're ever going to see a film, don't go with her if she's seen it because she'll tell you everything on the way into it. You'll never guess what happened. And at the end, he died. And you go, oh, great, thanks. I don't need to watch it anymore now. And that's all the time. It's right or wrong.
You're always moaning.
I'm not mourning.
You are.
It's you. Bloody nightmare at times. In fact, if I was talking of films, can you remember that big film, Jaws? You know, about the shark killing people. Chop, 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 chop. I'll tell you a little story about the way she treats me. Right, you'll like this one.
It was not a shark.
It was a shark.
It was not.
It was a shark. It was a shark.
It was that big.
It was vicious.
It was not.
It was vicious, right? What happened was we were on holiday, right? And we're in the water, in the beach. And I've got my red trunks on because obviously with a physique like mine, I'm ready for Baywatch. Well, maybe not. Yeah. Right, anyway, got me dad bod out and everything. Anyway, we're in the water and we're having a jolly time of things and splashing about as you do. And this shark,
Tiny little tiddler.
fish, came up and started biting me shorts. Now, I'm not rightly sure whether it was after the tassels or the thought there might have been a worm there. But I wasn't impressed. I was like, well, get out of it, you little... And I looked...
Little, so it was a small fish.
I'll rephrase that. Get out of it, you giant big toothed jaws thing that I saw on the telly. It attacked me. And it swam away, but then turned around and it come back. And I looked up, it sort of, to say to Wing, help me. This thing's coming to kill me. And all I saw was her arse running up the beach. She was. I just saw her running up the beach, and then she's there going... I think she just renewed the life insurance at the time. You're cruel, you would say.
It was a tiddler.
That's not the first time you said that.
You're taller than I imagined.
I'm bigger in every department.
Small fish.
So anyway.
Let's be focused.
Let's be focused. Sorry about the little things, but I did do a poll and people do like our little jaunts, because this is a vlog of what we do. And for all trading is our job, who says you can't enjoy it? And our life, well, we have a good time every day, or at least we try to. So let me show you sort of a statement. I'll use the 5%ers. And if you're not sure who the 5%ers are, they're a prop fund that if you're a reasonable trader or you're learning trading, they'll put the money up and you do a 50-50 profit split. It's a great program to be in. I've traded with it for about a year. You've seen me draw out my profits, and it's a good addition to my wages. Then the way it works is very simple. You have a 3-stage boot camp. It's a low entry cost of €85, or you can go straight to market and draw your profits from day one, and that's only $235. And it's very simple. They are the entry points. You just have to achieve a milestone. As soon as you hit your milestone, you're paid. Superb, you know. And then you work your way up right the way to 2.5 million. Now, that has been questioned in the past, saying why? Well, it's because they're putting their faith in you as a trader, and the idea is you both benefit. And why not? If you're good enough, to me, that is a whopping amount of money. Now, with the boot camp, it is broken up for a beginner trader to test the water, and you have 3 challenges to achieve over 12 months, so you've got plenty of time to do this. And then at the end of it, you'll get a 100k account to trade with, and that'll go up to 4 million. So again, if you follow the rules and stick to your plan, you can change your life with these guys. You genuinely can. And just as a little bit extra, if you go down the description, there is a 5% discount off this enrollment. So let me show you my statement, and we'll go through it. Right, this is the one that I've been showing you that I'm building up from scratch. Now, as you can see here, I took a bit of a dip, and I certainly did. And it looks bad, but it's not as bad as it looks. And I'll show you that in just a second. And of the period we're looking at, I've still done 250 trades, 90% hit rate. So I maintain my hit rate. I try to keep it above 85%. And my profit factor is 3.65. Anything over 1 is deemed sustainable and profitable. So even taking that big punch in the nose, all my figures stayed in line, and that's because I was focused on what I was doing. I don't have any trades running at the moment because I've shut everything down on my wage swing, everything, till I see what's going on. And as you can see, the last trade was the 25th, and it's the 26th today, so it's a current statement. Now, if I put my win rates on, you can see the slam. I took a royal punch in the nose, and it's just the nature of the way I trade. If I get it wrong sometime, I'm going to get clipped and I'm going to get hit hard. But all the way up to it is in profit. So I'm building pots of money up, and I understand what's going on. But the next day when I went back to market, I paid off nearly all of the losses. because there's the argument of saying, well, if you've got a high win rate, it only takes one to wipe out all the wins. True, if you're not focused and not planned. When I pull on the tool, you'll understand how that works. And even after the smack in the mouth, I still have a good profit. Now, just very quickly, just so you can see it's not a fluke. This is another account that I run for them. Again, I got clipped on the same day because there was a massive drop in the market, caught on the wrong side of it, and thump. But it held its profit, because you can see I haven't wiped any of my profits out. It's still there. Did 518 trades on this, 89.7, so it's still pretty good, and my ratio is 2.9. And again, last trade was yesterday on the 25th, you know, and again took a punch one day but got it back the next. All right, planning, that's what this is all about. So what's this got to do with a slice of bread? All right, very, very simple stuff. Okay, well, if you have a tool like this, you can start pulling everything into focus and really sort of fine-tuning where you need to be. So on the board, I said 10 grand for a year. So there's 10 grand. All right, you have a strategy that can do 10, 20 pips, 50 pips, whatever it is, but you know what your running average is, or at least you should. And that's why statements like that are important, because they help keep you on track. You see where you are, what you're doing. So you look at your profit factor. Is it staying above 1? Yes, well, you're on the right path. Is your hit rate staying pretty stable? Are your losses controlled? All these different things. All right? If you don't plan them, you're wasting your time.
What, so you keep a record of everything?
Well, you know I keep a record of everything. But yes, you're right. Journal everything. If you make a mistake, why did you make a mistake? And then you can look for it time and time again. All right?
Yeah.
Not, and that as a word of advice for you as well, mainly, is don't focus on your wins. Focus on your failures. Because if you know what's going wrong, you can prepare for it. If you're looking for the win all the time, you fall into gambling, because gamblers only ever focus on the big win. They never focus on what they lost.
Right.
All right. It's a different way of thinking. So let's just spark that in the middle and say you've got a strategy that's 15. But then you also need to know how big your bid size can be. And that needs to be controlled. I'm going to look at that in just a second. So say you have, I don't know, say you can do £2 a point because your account is big enough. This quickly tells you a baseline of what you're looking at. So if you want 10 grand in a year, based on a 5-day a week, 48 weeks of the year, because I'm assuming you want a holiday, or 12 straight months, it'll tell you what you need to achieve in money, how many pips, but also how many times based on the criteria you've put there. Right? But that's quite broad stroke. Right? It's not quite as in depth as where you need to go. So you drill it down to a month. Okay. And what we have here, we just start pulling all of this out just so that we can see it, is a month broken into 20 working days, because there's roughly 20 working days per month you'll use. Right? So each calendar month has 20 working days, Monday to Friday.
Right.
Okay. Look at, put your account size in here. Doesn't matter how big it is. You might only have, I don't know, 1,500 quid. So you got £1,500. But you're looking to grow at a certain percentage each month. Now, I know you've got the Lambo boys.
You ding dong!
Bring on the dancing girls. Get rid of this idiot. Fuck you. Off.
Who try and tell you they'll flip 100 quid into millions. It's la la land. You know, it's ludicrous. But what you can do is be sensible and think about making your money work for you. So banks at the moment are lucky if they give you a percent a year. So if you made 10 to 20% per month on your money,
It's better than the bank.
would you be happy? Of course you would, right? But let's just say you want to be conservative and you want to grow by 10%, all right? 10% in a month, all right? And if you think about this across the year, all of this adds up, compounds, and grows your money gently and steadily. It's telling you you're looking to make 150 quid. It's not a lot, not really. So that'll be your end game at the end of the month. This section will start counting down how far you need to go, keep you focused and help you plan. And then at the end of it, what you got left. All right. So it's a nice, easy way to trade and look. And so let me explain. So we know what your balance is. We know what your expectation is. If you just put in there 100, 500% because you want 10 grand in a month, just give it up, guys. It's not happening. Be realistic. 10, 20. On small accounts, 50%, fine. But once you start chasing sort of 200 and 300% growths per month, it's la la land. Be sensible. Plan it and stay focused. Okay? You know what your strategy can achieve for a single trade. All right? Say it's, I don't know, say it's 20 pips, just for argument's sake. 20 pips is not the end of the world. All right? Then put in your stop. Now, this is the big debate. Now, I scale into a trade. So I might start at the top with a 20 pip target, but I'm actually looking at entering back here somewhere. So the position down here is far greater than the first one. So it actually increases the pip count. Okay, so it might dip down 30 pips from the initial 20, giving me a 50 pip target. But I just put in the first entry, first point of target. Okay, but if you're doing 1-to-1, which I'll explain in just a second, that's where it is. So just put in an arbitrary target of, say, 60, because I like a wide stop. This is kind of roughly what I do. And straight away you look at that, think, well, no, that's inversed. Well, it is and it isn't. Because if I go into Scruffy Madness and I have a look at this and I put the same criteria in here, 60, put a target in of 20, just for argument's sake, it's actually 1.2. So it's better. And if I have a bigger target to start with, say 30, it's 1.5 by staging backwards to go forwards. It's a hard concept to get your head round, but if you understand it, it works. And I use it every day. And if you talk to the guys in the Scruffy Squad or come along, you'll see how that works. It's not a martingale system. It's a ladder system called pound averaging, which gets you a better price for the same position size. And this is where this works out. So what it's telling you here is we're looking for a 10% gain, but it's allowing you only £75 for that day. That is your allotted pot for the day. You can't have any more, right? Because it's working out the damage control of this pot. It's also telling you what your goal is. So your goal for the day, in order to achieve your target and help you keep it in focus, £7.50. All right, simple stuff.
Yeah.
All right, because what you're looking to do is grow that pot. So you're using this £75 to earn £7.50. You're not risking that. You're just using that as a pot to earn that. Okay.
10%.
10%. All right. Now, what you need to do is on your scales. I just touched on Scruffy Madness. Now, you might only want to use one position and go balls to the wall. I'm entering, and that's it. So you would put one there. And what it's telling you straight away is how many or how much your position size should be. So you'll be at 38 pence.
Yeah.
to hit your target of 20, and that'll give you your 750. Well, let's just assume you did 760. All right. It's telling you exactly what to do. All right.
Yep.
So the next day, you've now got 75.38 to play with because the pot's grown a little bit. It's giving you a little bit extra to recycle, and it's telling you your goal is only 749. So you've actually, because you've increased your pot, you've reduced your goal. But today, you might think to yourself, well, I'm going to break it in half because I'm not too keen on the circumstances. I think the market might move against me a little bit. So I'm going to break my position size in half to 2. All right. So what it's telling me is the maximum bid will be 37.
Yep.
But my scale point, where I'm moving into this, is going to be 19. So that will be my first scale. So I'll put one in at 19, and then further down, I'll put another one at 19, giving me 2 scale points. And collectively, I might do a tenner, just like so. And then it constantly starts working out how big your stop is, or how big your pot is rather, to use on that day. Now this day I might be going 5 splits, and what's happening is it's moving down all the time. So you only have to go in at 7p, right, assuming that all 5 comes in. And then what you're seeing here on this side is the scale pips, and what the scale means is it's the distance between your entries. So the first one will be 0. 12 pips down you would put another entry, then another 12 pips down you put another entry, and so forth till you've done your maximum of 5. Okay, but you might lose today. You might go -5. So what it does is it readjusts your pot,
Right.
but it also tells you that you need to catch up. So again, you've now got to make £8.8 from that pot, and it helps you focus and calm down. Go back to 2 splits, and again, when it's got a scale pip there on 2, what it's looking at is your stop, your maximum stop, and spacing it out. So if it's 60 and it's 2, 1 at the top, 1 halfway, which is 30. Simple stuff, guys, simple stuff. And then you might have won, say, a tenner, and it recalculated back again. So what it's doing all the time is helping you stay in focus, and then each day you can write your little notes along here. Your stop may change every day because every stop is different. All right. Your strategy should be roughly the same. You should know what your expectancy is.
Yeah.
But your stop is based on market structure. So today it might be 10, tomorrow it could be 60, could be 30 the day after. It is variable, but it works it all out for you.
Or even the stop.
Well, it doesn't tell you where to place the stop, but you have to look at the chart. The chart will tell you where the stop is.
Right.
All right. Now I work on 2 structure points. Why 2? Because it'll test the first one, and if it's going to the second one, I'm probably wrong. So that's why I work on, and it's like 2 swings of the market sort of thing. But the idea of this tool is to help you focus in. Now, let's just say you had a runner that was phenomenal, absolutely fabulous, and it did 145 quid in the day of one position. Your running total goes green. What do you do at this point? I paused for a reason to let you think. What would you do? You've hit your total for the month. What would you do?
Stop.
You stop. Exactly right. You've done what you set out to achieve. So stopping the month is exactly the same as stopping the day. Because when I got hit the other day, it had used up my daily allowance on that account. I just stopped. And then I reset the next day. And then when you saw me do Morningstar and one thing and another, which I'm going to get onto in just a second, I set out to achieve 1,000. Once I achieved that, I stopped, and that was it. I didn't go back to market for the rest of the month. Right? I've done other things. Well, in fact, what you saw was us having a bit of a jolly, because if you've been watching the video, as you say, I drew some money out. Well, I drew quite a lot of it out, and we went off to...
Matron, take them away.
Yeah, why not? Enjoy it. You know, and I've done the same. We're away again next month. So I hope that makes sense. And talking of Morningstar, what I'm going to do is, this is the Morningstar account. I've been testing it and playing with it. I've got two things running sorts in it. I'm going to close this off because I don't do a lot of shares, but I just wanted to see if I could work something. I'm going to shut that off on Monday because it's only 73 pence or something. It should be in profit. I'm going to draw this down to 350. So we'll draw some money out of this while we're on. So let's have a look. So we'll do that. So let's have a look. So that will be 2668. We'll just confirm that. Right, that's that withdrawal successful. And from the 1st of March, let's get rid of that. From the 1st of March, because I've been requested to do this, they want to see if Morningstar can be done with Forex. Now, I built it with the DAX, and I've spent this week messing around with it just to see if it's possible using the same criteria. So what I'm going to do is, from the 1st of March, I'm going to see if I can turn £350, which you've just seen me set up in this account. Why 350? Well, that's the change after our jolly, and also it's a reasonable account balance to start with euro, dollar, and cable, which is pound US. And I'm going to look at those two markets each day and see if I can build it up doing the same criteria between 6 and 8 a.m. in the morning. And the idea is to double the account over the course of a period. All right. And then we'll just take it from there. So again, trying to show you guys a little value and putting my head on the block. So see if we can grow this 350. But it all comes down to one thing, and that is
Staying focused.
Staying focused. Get your eyes on the goal and then just break it down and stick with it. So, is that it?
Yeah.
It's almost like, well, I've got a goal with you, but it's not really happening, is it?
Does it involve bikini?
Yeah.
Too cold, it's winter.
I'm trying, boys. I'm trying. I really am trying, you know. The thing is, though, you know, once you get over 50, it's not very good, because that's all you get. You get sarcasm and...
I don't know where you get your delusions, laser brain.
Wasn't that when we were younger, though?
Stay focused.
I love putting her on the spot. It's my favourite trick, especially when we're out. She hates it. Anyway, boys and girls, that is that. I do cherish your thoughts. Drop in the description, you'll see our contact details, and we're going to continue with Winky's journey as well. And well, it is a journey, so let's see if we can enjoy it together. So as always, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.